Good morning, everyone, and welcome to the PivotBoss pre-market report for Wednesday, September 5th, 2018. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. First thing you'll notice right here is that price continues to trend nicely higher here. Been a very, very bullish trend. We have pulled back, not quite as deep as the 28.78 halves, but we've gotten into about the 28.85s or so. That's the lows of the day, right in that area. And again, as I've mentioned before, any pullback to this zone could be a buying opportunity still. But a failure to hold that level could open up quite a bit more downside. And so we're keeping an eye on 2900 right now. That's the key pivot. And so far, bears have kept it offered yesterday. You can see the previous month's close went offered early on. We are in a higher value relationship, so we have already touched the pivot range, the top end of the pivot range. And again, the top end can be a bid, the middle can be bid, or as deep as the low. So the entire range can remain bid as long as this bottom one remains intact when you're in an uptrending market. And so again, overall, after a bullish August, we could see a sideways to up move here as long as the 28.50 zone remains intact. So that's the key level right there, 28.55. But we could fall as deep as that and still be bullish overall heading into the end of the month and into the beginning of October. So we'll keep an eye on this, but 2900 is the key level to watch early on. If price starts to push above that level, we could start running right away. Failure to hold or failure to get back above 2900 opens up a little bit more downside, perhaps as low as 2860. Okay. So let's take a look now at the NQ. You'll notice very similar price action here. The NQ's had quite a bit of strength here after this pattern led to another rise up. That's something we were looking at before. And now we're seeing a little bit of weakness here at the upper end of this range. And you can see that there's the previous month's high, previous month's close, both going offered right here at the moment. And that could open up at least a return back toward the midpoint. That's about 74.45, 74.50. That's about where the breakout point occurred before. So again, we could be retracing the move all the way back down before we find strength to the upside. So we're going to keep an eye on this zone again. Anytime you touch the 8-period average in a strong trending market, bulls would like to come in and defend. And so far you're seeing some of that. But if they don't get paid, there could be a little bit more weakness here ahead. Overall, I still believe that the market remains in an uptrending structure until proven otherwise, and failure to hold, say 74.40 again, would likely fail to prove otherwise and would open up much more downside ahead. So keeping this in mind, I think we have a little bit more pullback perhaps before we see the next bounce opportunity. Here is crude oil. If you take a look at crude oil, we had a significant rejection in the previous session, big time rejection. Huge day here. This was about 208% of ADR. It had been averaging over a buck. It was $2.30 something cents of range, something in that area. So huge range, and that range rejected the previous month's high, the previous month's close, and it also rejected the top end of the previous month's pivot range. That all coincided with this LVN around 70, and that's the level we've been talking about before. If price can't hold above that zone, we could be looking at a move back towards 66.30. And yesterday we saw a major rejection that could start or trigger a move down toward that end as long as price remains below 70.25. So you can see here the previous session's midpoint is 70.24. You have the high here at 70.49. That's pretty much the zone, 70.50 to 70.25. Any pullback into that zone could be an area to absorb over the next 1 to 3 days for a shot at pushing lower. So again, being patient right now with the failed new low suggests we could turn up and rally back towards 70, and then what happens at 70 will kind of give us more of an idea if we continue lower. So we could see a good shot at pushing back towards 66.30 in crude oil, and in heating oil, very similar price action. You'll see here a significant rejection that we had in the previous session. That also occurred off previous highs back here. Those highs are the highs of the year, and a big rejection. That rejection also coincided again with the top end of the pivot range sorry, the top end of the pivot boss pivots here at the previous high, previous close, and when those go offered and they're so close to each other, the only two levels left to test for the month would be the midpoint and the low. So if these two are going to go offered and they're so close to each other, most times we'll come back to here, and if that level fails to hold, then we drop into the next level down. So those are two big levels down. 217 could be the next one down if price can remain below 226 in heating oil. All right, taking a look now at RTY. Haven't looked at RTY here in a while for the pre-market video, but this one is holding above the key range here. Here's your key range high, and that is about the 1720 level. You have the midpoint here at about 1676. You got the 1632s here, and so far we're holding just above the top end of this key range, and you can see that's the change of bias. Here's the defense, here's the defense. Each time it gets to a new high, though, it's having to auction and rotate back down. Do we fail to hold the 1720 level? Because if so, failing to hold 1720 opens up a move as low as 1676 back toward the middle portion of this range. That could be a quick, easy move. So that's going to be something to watch. Do we see a failure to hold 1720? Because that opens up much more downside. Bulls are going to keep this bid, and that's happening now. So bulls are trying to see this thing go higher, but you know sell stops are below if they fail to get paid. And right now, a rejection at the previous month's high and close are early signs that bulls right here could fail to get paid. So again, keep an eye on 1720. Lastly, taking a look at Bitcoin, giving it back today, down 5.33% so far. As long as price remains above 6,700, this remains the likely outcome here. 6,700 a big level, 6,000 is a big level. These have been where the accumulation has occurred, and once we've broken back above that zone, it's been pretty steady about going back toward value as long as market structure remains intact. So 6,700 is the level. We are pulling back into the pivot range, but that's normal here given the change of bias that we've seen over the last month. A pullback into that zone, again, offers an opportunity for bulls to defend for another round higher. All right, that is it for now. Let's see how this plays out heading into the rest of the session. Good luck and trade well.